covering euro dollar today. Took longs in New York. I do want to make a study on this because there was a couple of you guys that were confused slash weren't confident in pulling trigger on the entries. So that's fine. I want to cover it and explain my thought process through everything. So quickly to start off on the 4-hour time frame here, we have grabbed liquidity from the past, left-hand side over here. Structurally speaking, you can see that sellers have been selling this whole area over here, right? And now they have now just been taken out, right? We wicked right below it. Now, hopping into we'll go into the 15, you can see things more clearly, but so we grab the liquidity from that low, price goes long, taking out this internal point here, which causes retail to think, okay, we've taken out a high to the left-hand side. Maybe we can see buys right from the lows, just like this. They failed to realize this is just going to be a trap. We want to wait for this low to get taken out, okay? So let's go into the 5-minute. Cool. So London, big sell-off after taking out this internal point over here. Look at this build-up Asia provided us on the way up to taking out the high. And we get a big sell-off. Look how price respects the low, okay? Goes long, prints a high. And then we come down, taking out the previous low. So kind of building some structure here for retail. Then we get, look how we respect the low still, okay? Engineering more liquidity at the lows below here. We go long, taking out this internal high, giving retail a reason to, again, buy, but this is, again, going to be a trap. We don't want to be looking for entries here. And bumping our heads right into a liquidity block, right? So price runs this structural point here, trapping sellers, tapping into a liquidity block, and then selling off, taking out the engineered liquidity at the lows. Okay, cool. So now that all the liquidity, think about it, all of the liquidity is now taking out at the low side, right? All the buyers. You have the high from the left. If I can see it on the 5, no, we can't. We have the high, sorry, not the high, the low from the left. Okay, ran. We also have current price action telling us that we've now taken out buyers on the lower time frames here, right? Anybody looking to sell here, taken out. So now we have a liquidity block provided for us. Cool. What does the liquidity block mean for us? It means that price has no reason to run to this low. Okay, we've taken out all the liquidity, and liquidity blocks should get respected and moved away. Cool. We can keep that in mind. So we print that low, and then price moves up. This is where everybody got stumped. We've taken out this high, but don't forget, we're still trading within this whole bearish leg, okay, that retail thinks is going to be sells, right? So if you look at this from a retail perspective, we have everybody thinking sells are going to occur here, okay? We're going to have everyone thinking sells are going to occur from these areas up here, but this is all going to be traps, right? Because this is not a break of structure. Okay, we don't look at the market like that. This is just a run on liquidity at the lows. Now we can expect price at the highs. Okay, and with that understanding, every single time we get a reaction from these areas, it's just providing us another entry to buy. Okay, buy, buy. These are all traps. Okay, and you got to keep that in mind. Until we get up here, we need to be looking for buys. Okay, so with that in mind, I want to keep this as straightforward and as simple as possible. Okay, I don't want everybody to get complicated, or I don't want to make this too complicated. Price, again, prints that low, creating that liquidity block for us. We run higher. Okay, before we take out this high, we have done what? We have respected the high. Okay, giving us a inducement low. Perfect. Then we take out the high, but look what we're doing. We're still trading within this smart money trap to the left, and essentially just building more liquidity at the highs. We get a sell-off, taking out that inducement low, tapping right into a liquidity block. This would have been one entry, just like this, okay? With our liquidity block, or sorry, our stop loss tucked below the liquidity block, just like that. And we can target up here, okay? Or just to be a little more safe, we have an inducement high here. Look at the difference between this inducement high and the structural point. It's only 2.4 pips. So why not just take partials at this inducement high, right? It's 2.4 pips. Doesn't affect too much, okay? This versus this. So we can just partial there, no problem. That would have been one entry. It's hard to see on M5, so we'll go to M1 for this confirmation-based entry, but we have the same kind of thing going on the 1 minute here. Highs taken out to induce buyers, buyers trapped, okay? Now you go to the M5, keeping it simple as possible. You have another liquidity block right here, okay? So look, notice how it's just continuation. Again, we'll go to the 1 because it kind of gets squeezy on the 5. So this would have been one entry. This could have been your second entry right here. You don't have to take all of these. These are just, again, examples of how you could have been involved in the market here. Boom. And then look what we do. Price is respecting this high to the left-hand side. Look, once we stab into it, false sell-off. Second time we stab into it, false sell-off. And look what we have at the low. Inducement low at the extreme over here. So if you missed the first entry or the second entry, there is a third entry opportunity right here. Just like this. Boom, just like that. Okay, so look how there is a liquidity block here, and we've taken out this liquidity here. Boom, and we've taken out this liquidity here. So this is a liquidity block. All of these are different entry opportunities to get involved. Again, look, every single time we run into these areas, it's just false reaction. This is going to be a false reaction to the downside. This is just a false reaction. It's just a pullback. Okay, and then continuation. Look, over here, we're reacting off some sort of smart money trap to the left-hand side. And it's just providing false reactions. Look what we do. Take the high, take the low, and liquidity block. Same thing over and over and over and over. Okay? I want to make this one short and sweet. I don't want to overcomplicate anything. So again, look how to start off, to provide us a direction, to provide us that bias, we take out the internal point here. Okay? Buyers are going to be getting trapped at the low here. After we take them out, we now have direction, meaning we want price to move from here up to here. Okay? And we play that lower time frame price action within here.